Hey, what's up, Silver Stackers? Thank you so much for being here. This is Silver Slayer. I've covered a couple different times the situation with the US Mint not being able to acquire enough silver to make the Eagles and other coins as well. They had to put they had to put a mintage cap on the Type 1 and Type 2 Eagles, had to cancel the 2022 Morgan and Silver Peace dollars. I mean, it's just a mess with them right now. And part of it has to do with the laws they have to go by. They cannot pay above spot to get their silver. But there's also another situation happening. See, other mints can pay above spot. But the US Mint outsources their silver. They get most of their silver from the Sunshine Mint. But here's the problem. Sunshine Mint doesn't have to go by spot. They can pay above spot. So if the US Mint's trying to get some silver from the Sunshine Mint, but the Sunshine Mint's like, hey, you can only pay spot, but I could sell my own silver for way above. Why would the Sunshine Mint go to the US Mint or help them out when they can make so much more money? And that's the situation. Sunshine Mint's only selling them the most minimal amount of silver possible because it's profitable for the Sunshine Mint to, sell their own inventory. So that's the situation that's happening, and it's pretty funny because I overlooked this a couple different times. I mean, I slightly touched on it, but I want to make an entire video mentioning this situation because it's just another thing the US Mint has to deal with. I don't know why they outsource all their silver nowadays. This wouldn't be a problem. But even in this article, he mentions even if the US Mint didn't outsource anymore, they have such a limited amount of workers and the equipment, they wouldn't even be able to. They're stuck in a corner where they have to. See, even right here, early on, US Mint did manufacture their own Silver Eagle dollars and, talked about the mintage. At some point, the mint stopped acquiring physical silver to prepare their own dollars. Instead, it went outside planchet suppliers such as Sunshine Mint. And then after this happened, this guy even had a chance to talk with the US Mint director. Asked why the mint was outsourcing its production of Silver Eagle planchets. He said the variability in demand from year to year during his time, 2006-2011, for the uncirculated Silver Eagle dollars ranged from 9 million to 40 million, made it difficult to maintain equipment and personnel for high production years, also enabled the mint to trim costs in low mintage years. The mint does not experience such wild swings in public demand for coins struck for circulation purpose or for the numismatic market. In order to economically smooth out mint operations, it would have to limit the maximum number of Silver Eagle dollars it struck each year, contrary to the U.S. law that specified the mint strike sufficient coins to meet public demand. So the solution to this dilemma was to outsource planchet production. Thus, the capital, personnel, and overhead costs and logistics were someone else's problem. See, these planchet manufacturers signed long-term contracts to supply the US Mint a specified number of blanks, with some wiggle room for times of lower and higher public demand. Here's the problem. The problem with outsourcing arrangement is that the suppliers to the US Mint also created bullion products sold in competition to the US Mint. So in times when the US Mint experienced high demand for Silver Eagle dollars, the planchet suppliers were also enjoying higher demand for the coins and ingots that they produced for the public. These suppliers enjoyed higher profit margins when selling their own coins and ingots to the market than the margins they made when selling to the US Mint. See, these suppliers could purchase commodity contracts to take delivery of physical silver at spot price, but in times of high demand, the silver source would not provide adequate silver supplies to fill demand for both their own products and to supply the US Mint. And that's the craziest part about this is these suppliers were not restricted by law as the US Mint is into only purchasing silver on the basis of commodity market spot prices, right? That's only the US Mint. Consequently, they can offer to pay prices above spot to acquire silver for their own product lines and pass along these higher prices when they sell these coins and ingots. But as they absorb the physical silver available on the market at spot prices above spot prices, that leaves less metal available at spot price to fulfill the US Mint contracts. And therefore, the US Mint runs the risk of only receiving the minimum amount of Silver Eagle dollar planchets from these suppliers, as specified in the purchase contracts. Unfortunately, now the Mint does not have the equipment or personnel to again resume acquiring their own silver and once more creating their own planches in large quantities. And that's what I was mentioning. They can't even start even if they didn't want to outsource anymore, they don't have the equipment or personnel to do so. So they're stuck outsourcing all their silver, getting it from people who don't want to sell it to them because they're making their own profits. Do you see this the type of situation that the U.S. Mint is in? And do you see why the Sunshine Mint's kind of shady for this? I mean, and even it even goes down here is like, they built a relationship. There should be some type of, it's not always about the dollar. It's not always about money. We see you're struggling. We got you. We've been business partners. We're doing this for several years, but they're not. So, anyways, as I understand it, as this guy, the Mint has been able to negotiate some increase in Silver Eagle Dollar planchet supplies on the basis of being major longtime customers of these suppliers. And that's what I was just talking about. However, these suppliers also have huge profit incentives to provide the U.S. Mint the minimum number of planchets. In addition to there being difficulties of the U.S. Mint obtaining sufficient Silver Eagle Dollar planchets from their suppliers, there's also the difficulty of actually obtaining physical silver upon maturity of commodity contracts. I mean, the U.S. Mint is in probably one of the worst situations a mint could possibly be in. So if you're someone wondering why Eagle's premiums are so high compared to other coins, this is why. And this is only one little part of this is something I overlooked a lot because it wasn't even that important. This video that I'm talking about, the Sunshine Mint doing this and all these other mints, mainly the Sunshine Mint though, this isn't even the meat and potatoes. This is just something that I overlooked, but as I think about it more, it's pretty messed up. It's a much bigger situation, much bigger situation. I mean, the government's trying to hold down interest rates on its own $30 trillion of debt, and that's why this situation, this law, is not going to get passed or even wiggle room. I mean, this situation is only going to get worse since it's not looking like the U.S. Mint is ever going to get an opportunity to pay above spot that these other mints are able to or that are allowed to do. So anyways, the New York, and this is the other problem, the New York COMEX allows mature contracts called for delivery of the underlying physical commodity to be settled under one of the four different options. One, delivery of the physical commodity. Two, cash payment instead of the commodity. Three, shares of an exchange-traded fund, or ETF, for the equivalent quantity of the commodity. Or four, exchange for physical. See, exchange for physical, number four, means that the party requesting delivery of the commodity instead receives some cash plus a contract for the same number of ounces, the commodity in the London market. The last of these used to be considered an option only be used in emergencies since it was the most expensive way to settle a contract. However, it appears that most settlements in the silver market over the past several years has been by exchange for physical. In other words, those hoping to obtain physical silver at spot by purchasing commodity contracts and holding it to maturity either will, one, never get the physical metal, or two, only receive it much longer in the future than the maturity date of the original contract. It's also possible, and this is crazy right here, that a commodity market could get so out of order with insufficient metal to deliver against demand for physical delivery, as demonstrated by nickel commodity markets over the past few weeks, that the entire commodity exchange for that commodity could freeze or collapse. I mean, with this information in last week's column and provided here, you now have a better understanding of the difficulty for the U.S. Mint to acquire sufficient silver to meet demand for its products. And he's mentioning last week's article because that was the one that went over all the laws and regulations and stuff. This is just a little bit of backstory of, more of the mess that the U.S. Mint is in. Like I can't even imagine being in that situation and also seeing, the demand, silver demands down 69% from last year. And it's not just because people aren't buying silver, it's they're not buying Eagles. I just made a video, the British Royal Mint, 47% increases. You know what's crazy? Listen to this statistic. The U.S. Mint sold 5 million ounces the first month of January. Guess how many ounces they sold in June? 52,000 ounces. went from 5 million ounces in January to 52,000 ounces in June, where the Perth Mint has about 116, something like that, 1,000 ounces they sold in June. So the Perth Mint's doubling the U.S. Mint. And it seems like the Perth Mint and the U.S. Mint were the top dogs in the beginning of the year, but now, and the British Royal Mint wasn't really, but nowadays the Royal Mint's the top dog. So it's almost like people are switching over to government bullion coins, but ones that are very cheap over spot, which makes sense. Regardless, though, that's a video I made earlier today. I wanted to talk about the situation with the Sunshine Mint. Now, they did mention some other mints, or I want to see, because I know Sunshine Mint is the main one. So it talks about it right here, talking about the U.S. Mint outsourcing. So it went outside plant suppliers such as Sunshine Minting, Leach & Garner, and the Perth Mint, possibly even the Royal Canadian Mint, which is pretty interesting. See, the Perth Mint and the Royal Canadian Mint did also mention silver shortages, so I doubt much would be coming from them. In 2021, when the U.S. Mint finally announced it, these two mints also announced it. And actually, the Royal Canadian Mint's actually scrapping silver out of cell phones to try to recover some silver for themselves. So I don't even know Leach and Garner. I know most of it, though. If I'm not mistaken, most of it is coming from the Sunshine Mint. So, I mean, what do you think about this? I think this is pretty crazy that the U.S. Mint is at the mercy of a private mint. The most recognizable, biggest mint in the world, right? I mean, look at this: 40 million ounces in 2011. The U.S. Mint's used to selling 30, 40 million ounces per year. That's the mintage numbers from 2015. So, but in 2019, all of a sudden it went down to like 14 million ounces. Out of nowhere, basically, and they couldn't even fill that demand. They couldn't even fill that demand, which is pretty crazy. So I don't know. And the other problem about this is, and this guy actually covers it in the other article. He's saying that this situation isn't going to fix itself or seem to be getting resolved anytime soon. So it's like these premiums are just going to keep getting worse. And here's the other article. I'm not going to go into it too much. It just goes over all the codes that the U.S. Mint has going up against Congress, blah blah. It's and here's basically the law. Here's the law they have to go by. So it's 31 U.S. Code 5112F1 requires that Secretary shall sell coins minted under subsection E Silver Eagles to the public at a price equal to the market value of the bullion at the time of the sale plus cost of minting, marketing, distributing such coins, blah, blah, blah. And then goes over, and this is the important one right here. This is the important one. Or it's not the gold one, it's the silver right here. Hold on. Okay, so the Secretary shall pay or shall not pay more than the average world price for silver under any circumstances. As used in the paragraph, the term average world price means the price determined by a widely recognized commodity exchange at the time silver is obtained by the Secretary, which they use the LBMA, the London Bullion Market Association. See, other mints are allowed to pay more than the spot price. Other mints are, but the U.S. Mint can't. And effectively, obviously, the U.S. Mint is prevented from complying with one statutory requirement to produce eagles sufficient enough to meet public demand. I mean, and this is the important part. Unless these statutes are changed to allow the U.S. Mint to purchase physical silver at prices above, it will have continuing difficulty in acquiring sufficient metal to meet public demand. And like I mentioned, other private and government minting operations are able to, and they are doing so. And these are the same people supposed to be selling to the U.S. Mint, but if they're able to make all this money doing so, then why would they even sell to the U.S. Mint in the first place? Besides just a pat on the back and a good partnership, just trying to be nice, right? These mints are therefore more likely to obtain the silver they need because they are paying higher prices than the limit imposed on what the U.S. Mint can pay. And it even gives the solution, right? The U.S. Mint's problem of obtaining sufficient silver to meet public demand could be cured by changing the law to give the mint greater price flexibility. I doubt that would ever even be considered, and this is what I was saying earlier. The federal government has a strong interest in holding down silver and gold prices as a major tactic to minimize the interest rate it pays on its own $30 trillion of debt. So this concern would almost certainly override any consideration of allowing the U.S. Mint the flexibility to acquire sufficient silver. Basically saying, since we're $30 trillion in debt, we're never going to let the U.S. Mint acquire sufficient silver. We're not going to give them that price flexibility. We have something much bigger at play, which is our debt. So as long as the market price for physical silver remains consistently higher than the paper commodity contract price, the U.S. Mint is going to continue experiencing difficulty in obtaining sufficient silver. And then going back, so now that you get what I'm saying, now the only the only option they have is Sunshine Mint, which is only going to give them the minimum amount. The minimum amount. So just imagine the situation they're in, guys. Like I really hope I'm capturing the severity of the situation with the U.S. Mint, because I think a lot of people aren't educated into all of this, the backstory. They're kind of just assuming what's happening and kind of just saying, "Oh, I'm probably right," and almost going off their assumption is correct or most likely correct. But if you look into the situation, it's much deeper. And I'm actually going to show you the guy that wrote this. This guy knows what he's talking about. Both of those articles I just covered is from a guy named Patrick Heller. See, Patrick Heller was honored as a 2019 Fund Numismatic Ambassador. He's also the recipient of the American Numismatic Association 2018 Glenn Smedley Memorial Service Award, Exemplary Service Award, 2012 Harry Foreman National Dealer of the Year Award, and 2008 Presidential Award. Over the years, he's also been honored by the Numismatic Literary Guild, including twice in 2020 Professional Numismatist Guild, Industry Council for Tangible Assets in Michigan State Numismatic Society. He's a communications officer for Liberty Coin Service in Lansing, Michigan. He writes Liberty's Outlook, a monthly newsletter on rare coins and precious metal subjects. I mean, he knows what he's talking about. This isn't just some random reporter that thinks he knows what he's talking about, writing conspiracy stuff from his friend that he heard. No, this guy knows. And up here, he even said he had a chance to interview one of the, I think it was in the other article. Let me see it. Yeah, it's in the other article down here. Let me get to it. He mentions that he even got to interview the guy and asked why mints don't, or why the U.S. Mint is outsourcing their silver now. Yeah, right here. He had a chance to talk with the U.S. Mint director at the time. I think his name was Edmund C. Moy. Asked why the mint was outsourcing its production of Silver Eagle planchets now, because that's why they're in this deep water. He said the variability in demand from year to year, where during his time was 2006 to 2011 as the mint director, the uncirculated Silver Eagle dollar mintages range from 9 million in 2007 to 40 million in 2011. That is a lot, right? That made it difficult to maintain equipment, personnel for high production years, but also enable the mint to trim low costs or costs and low mintage numbers, which makes sense, right? 40 million ounces in 1 year, that is a lot. They couldn't even fulfill 13 million ounces in 2020 or whatever. 2019 was 13 million ounces. They had to put a mintage number on the Type 1 and Type 2 Eagles in 2021. So you see what I'm saying? The mint does not experience such wild swings in public demand for coins struck for circulation purposes or for numismatic markets. In order to economically smooth out mint operations, it would have to limit the maximum number of Silver Eagle dollars struck each year. Limit the maximum. That's why there's a limit on these coins nowadays, or most of them. Contrary to the U.S. law specified, the mint strikes sufficient coins to meet public demand. So you see that they have to meet public demand, but they also have to limit the amount because of the high demand. I mean, it's just a very sticky situation. So anyways, yeah, I hope I covered the purpose of the video that I tried to, is which Sunshine Mint is basically the reason that the U.S. Mint is having such a hard time. Yes, it's much deeper. Yes, their own laws. But Sunshine Mint, the person that they're getting it from, just isn't giving them enough because they're profiting from their own inventory. So why would they sell to the U.S. Mint only getting spot when they could sell way above spot? So anyways, yeah, I'm going to wrap this video up here. If you thought this video was educational, informational, at least entertaining, make sure to hit the like button. I'll ask you to subscribe. I'm never going to ask you to subscribe in the beginning of the video because why would I ask you to like and subscribe to a video the first 10 seconds? You don't even know if you're going to like the video. You don't even know if you're going to like my channel. I'm not going to ask you to subscribe right away. But now that I've offered my content, now you could actually see if you want to like the video or not. You could choose. Now, if you think that this is a channel you would like to subscribe to since I've given you something, then please do. I post daily videos, all types of content, stuff like this. I do unboxing videos, I do giveaways, I do it all. Stacking strategies, bullion versus numismatics, whatever you want, I do it all here. Every day, multiple videos a day. So stay tuned. Like to see you around. Link to this article will be in the description. Let me know. I always love when you guys participate in the conversation of what do you think is going to happen. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.